Alright guys, let's begin. New episode. Early morning here in Lisbon, Portugal. As you might know, I reside in Manchester, the UK. So I thought to myself, as I'm here receiving delicious sunlight, why not I resume my episodes? I'll have a long day ahead of revision for the CFA, of work as well. But while I'm here enjoying this dosage of vitamin, why not I turn on my camera and present to you guys another episode to keep the academic observer going. And I think this topic is actually quite interesting. So shall we begin? Let's do it. And I want to begin this episode by mentioning two quotes. One is from Peter Lynch, and he tells us that the best time for us to get involved with cyclicals is when the economy is at its weakest points, where profits are at their lowest, when public sentiment is as pessimistic as public sentiment can be. Then there's another quote by Howard Marks, who also says that the best time, better said, the best place to look for a bargain is in the pile of things no one else wants to touch, because by definition, those prices already reflect no optimism. And it's in this spirit that I want to begin the episode. I'm going to explore here an opportunity which you can see it maybe as an asymmetric one given our realities today, because it goes against the Western grain, right? Against our immediate tendencies to electrify our mobility grids through the implementation of battery electric vehicles. Which, I mean, if you think about it together with me, and I'm not just speaking about BEVs, I'm talking about EVs in general. They can really shape up our reality. They can change the topologies of our gas stations. They can change the topologies of our parking areas. They can become more and more intelligent with time, right? Act as our little data and energy wallets every time we move around. You can really be creative with and imaginative with how our reality can shape up from it, right? Think about this intuitively with me. Who's going to stop me from treating my car as a gadget, like a fridge or a TV, the moment you remove the combustion of fuel from it, right? And you electrify it. Of course, we're going on a very creative tangent here, but there is potential for disruption. This is why I think the topic, while not directly related with this channel, I think it's worthwhile to discuss. And so with this said, I want to, it's not a villain arc of mine, I'm just going to look at an anti-EV commodity potential that's betting actually specifically against adoption trends of battery EVs, the Teslas of our world. I still believe in bringing a sustainable future. It just means I'm not so confident with this marketplace's adoption trend specifically. So for that reason, I want to focus here on the thesis of, are you ready? Platinum group metals. Pardon for the plane. Interesting fact, here in Lisbon, the planes fly incredibly close. So there's chronic noise pollution in the city because the airport is central. It never makes sense. I'm here on the 9th floor as well of this building. So you can only imagine. We're not too far away from planes every time they pass. Anyway, we're talking here about the platinum group metals, PGMs for short. And these refer to 6 organometallics here. It's palladium, it's platinum, the protagonist, it's rhodium, it's ruthenium, it's iridium, and it's osmium. I've said 6. The reason why we call them a platinum group, a unitary group, is because they have all very, very similar physiochemical characteristics. So if you check in the periodic table of elements, I can drop here perhaps a Mendeleev, right? You will realize that in the purple area, so these are transition metals, D block metals in group 8, 9, 10, and periods 5 and 6, you have those 6 metals together. Now, I don't want to turn this into a chemistry class at all, but what they do is these metals are great at linking the hydrogenation of reactions in organic chemistry. So the obvious denomination we can take from them is that these 6 metals, and just by looking at the periodic table, right, they have very high melting points, they're very mechanically strong. You assume that they're They have very stable electrical properties, right? Looking at the 4D, 5D electron shells. And at the end of the day, more relevant even, they are quite interchangeable in terms of industrial application. That's why we call them the vitamins of industry, actually. Interesting fact there about the PGMs. Now, also important for this episode, and what I want to focus on, I've just given you an introduction of what PGMs are, but PGMs are essentially catalysts applied to our exhaust systems. So I think you know where I'm getting at. They are called the catalytic converters. They'll turn that nitrogen oxide and other exhaust fumes into water, into CO2, into nitrogen to reduce that smog that's emitted during combustion of fuels in our cars. So you can imagine this was a killer app back last century, even the turn of this century, the 60s, 70s, 80s, 90s, 2000s. The adoption trends of PGMs was great, right? The question now people ask is, do we need them now? Do we have to be as reliable as we are currently for these metals today? Now with the push for electric vehicles. And the truth is no, these electric vehicles do not require catalytic converters in the first place. Hydrogenation is not used in the first place as fuel. And when you consider that approximately 85% of the world's demand for palladium, that is 90% of the world's demand for rhodium, half the marketplace percent of the world's demand for the more popular platinum as well, depend, all of these, on traditional fuel vehicle engine manufacturing. A shift towards the alternative battery electric vehicles should be the nail in the coffin for PGMs as a whole in terms of demand. You could argue with me, Nuno, but platinum is still required and quite popular on jewelry and luxury items. Yes, that's true, but I believe, given the conversation we're having, that is quite a residual amount. Then you could also say, but platinum is 30 times more rare than gold on the Earth's crust, which is true. Does it matter though? That's my only concern, because I even think gold and silver, either way, even if they're 30 times more abundant on the Earth's crust, I do think they're more popular as luxury items, even in that segment of market, than platinum. Platinum does not have the same sheen as gold. Platina tends to form in it, which is never ideal, right? So anyway, and we've tried to come up here with different arguments, it's logical just. It's the easy route out for us to assume that a rise in battery EVs should mean the gradual demise of PGMs. And this has become practicable as well. If we look at numbers, the World Platinum Investment Council say that almost a quarter, that is 25% of PGM miners worldwide today are making losses. Okay, and well, as a result, there's a reduction in staffing. So Anglo-American Platinum, they've laid off almost a fifth of their workforce. Sibanye-Stillwater in South Africa, the same thing. Thousands of jobs cut. Impala in Canada as well, reducing workforce. So the demise trend seems to be tangible today. But remember the focus of this episode. We are here to discuss in favor of PGM still. How this view can be perhaps misinterpreted, or at least we take the perspective from the positivists, right, regarding this type of metal, of group metals. So let's think together here and draft ideas. For starters, I will be very quick to admit that electric vehicles are very fine to drive. Wonderful. My cousin even calls them silent assassins in the street because of how reduced noise pollution is, right? We don't hear them. We don't hear those engines when they drive by. But, that's my big but, nothing tells me they're cheaper than conventional gasoline vehicles, unless you're looking on making the rest of the car parts cheaper, relatively, right? The big difference in costs should be in procuring an engine versus a battery. Now, an internal combustion engine will cost you typically a third of the price. And a battery, ballpark here, I don't have numbers in front of me, but it will degrade twice as fast as an engine. Nowadays, that's the reality, right? You can argue with me, and we can argue. So you're arguing with me because I'm not taking any position yet. You can say this will change because on one side, engines, they've had so much R&D in them for almost a century, and battery electric vehicles is kind of a starter thing yet. Sure. Toda. But the truth is, for you to see this type of change, you'd have to see it in the costs of raw materials, which are, again, in my eyes, very unlikely to get any cheaper. They're scarce in nature. You'd have to resort then to the process of recycling, and all this just adds up and piles costs. We can also argue electricity is cheaper than gasoline, and I would say again this is true, but are we factoring here certain imputed costs such as range issues, such as flammability, such as long charging times? All these things matter as well. And electric vehicles, for me personally, and I'm sure I share this vision with other people, it is not shown to me the typical S-curve that we expect when a really disruptive invention comes into the marketplace, like the smartphone was. Maybe I'm being excessive here with this example, but you see where I'm getting at. And, all this could be futile, honestly. You could argue with me, look, why are we even discussing this? It will just be regulated upon us. It's not in our control eventually. Everyone will end up being resorted to driving electric vehicles come time. So, from what I can tell, logically thinking, only a very centralized and powerful government like in China is it possible to bridge what is still a very wide gap in value proposition of an internal combustion engine vehicle versus the battery electric vehicle. And maybe this calculus can change with time as we commercialize solid state batteries, but this is so far by no means a certainty, is it? So yeah, that's my first understanding of cost benefits of battery electric vehicles and how it could help the thesis we have ongoing on whether there's upside potential for investment and at least batting an eye on PGMs, right? And especially now, big brands like Toyota, they're resorting to the production of hybrid cars already because they see it's not sufficiently tractionable to fully invest in BEVs. So many of these big companies are already betting on hybrid vehicles, which is, yes, electrified, but still requires the motor, which then it's great for the cause of the PGMs because PGMs continue to be required for that production. And we're just talking about engines here. Of course, PGMs can be used in many other car parts, but we're focusing on the engine part, which is the biggest differentiator between the two. Now, hydrogen. Hydrogen is used very commonly in ammonia synthesis, right? In petrochemical processing, as we already said. PGMs, they are catalysts. In hydrogen-related reactions, in the hydrogenation of organic chemistry, whatever it is, it's not strictly hydrocarbon focused. It's not just for hydrocarbon reactions, for hydrogen-related reactions. And thankfully, there are new, maybe you could call them theoretic or blueprint ideas yet, of, for example, the hydrogen cell industry for our transportation. And this would further encourage an increase in consumption of PGMs, right? PGMs are not villains in this. They're not antagonists. They can be protagonists still, even if their numbers are not looking too good today. They can still be contributors to our goals of achieving carbon neutrality by 2050. Now, of course, hydrogen fuel cell is a bit of a wild card still, just fuel cell vehicles in general, because what they're doing is they're using hydrogen as fuel instead of gasoline. But these so-called fuel cells, they still take hydrogen from fossil fuels, from like natural gas, right? But you can also produce hydrogen through electrolysis, for example. You're putting electricity through water. Any of the cases, PGMs are required for both electrolysis, for both fuel cell, okay? For every unit of vehicle sold, that engine needs to have a PGM. But, I'll agree with you, it's still a pipe dream, this one. So sure, fuel cell vehicles have the same issues as battery electric vehicles we already discussed in the beginning. They are more expensive. They're very costly because they require compression of the hydrogen into liquid form. It's also a great potential for explosiveness, which is never good, and that's why the airships during periods like the Hindenburg disaster could never go into the sky, right? So we're going in circles here. The same problems we can identify with battery electric vehicles, we can identify with all these other ones. All in all, gasoline continues to be a top seller because it deserves to be a top seller. It's incredibly energy dense, it's incredibly easy to transport, it's incredibly abundant today. And that's why I think, fortunately or unfortunately, realistically, better said, gasoline and these petroleum-derived fuels, they are here to stay, at least for now. And that means demand for PGMs, are they really at risk? You ask that question, right? Because many people are predicting that they are at risk because of the future for battery electric vehicles. Are they really at risk? We have to think critically here. Now, I don't want this episode to drag too long, and I feel like it already has, but I also think it's important that we touch on the supply scene, the supply chain picture. And maybe even here, this is my lottery ticket in defense of PGMs. Maybe an evil one, because look, the distribution of PGMs today is extremely uneven between a consumer and distributor, right? It's approximately 99%, and I'm not exaggerating here, you can check, of PGMs are distributed and sourced from 3 countries. And guess what? These 3 countries are South Africa, Russia, and Zimbabwe. And I even did an episode on Zimbabwe, the last one I did. So you can check that one as well. There's a very, very, very big disparity in regions of consumption and distribution. Because the consumers, they're going to be those from the West, the US, Europe, China, all these big nations. They contribute heavily to importation of these PGMs. And, it just exacerbates, in my opinion, a conflict between supply and demand, which maybe I'm thinking too linearly here, but it should intensify competition for PGM mining, and that for me is an upside potential for these metals. Don't forget as well, as I already mentioned, Russia, South Africa, Tanzania, they're not exactly the most stable countries on earth. Let's be honest here. So if either of them get cut off from this chain, you can only imagine what can happen to PGM prices. And we already saw this impact very momentarily with palladium prices after Russian sanctions. I think the price went 5x before kind of normalizing again. Norilsk nickel in Russia as well, they're facing many difficulties in obtaining machinery, in obtaining equipment to continue production. Platinum and palladium, of course, are both byproducts of nickel and copper mining, and Norilsk nickel, if you guys know, it's one of the most important one worldwide. So, right now we have expectations. PGMs are at their 5-time lowest. Remember the 2 quotes I mentioned at the beginning of the episode, right? It doesn't help. Nickel prices have also dropped recently. The world is in a generalized slowdown for production, or was better said during the pandemic, but now there's potential for traction again, right, in markets, and you already see many markets have already took this. It's about time PGMs take relevance as well again. Now, the pre-COVID-19 period, worldwide mining, yes, it had an inflationary period as well. It shot up 25+%. Again, momentarily this is because of the cost curve. It was benefiting from exterior factors like the weak rand in South Africa. So this just goes to show it's very complex in actually predicting prices of commodities like this. At the time, the rand was 50% down versus the US dollar. This was in a decades period, right? So the real effective exchange rate, it has not dropped as much, but it remains low, right? And if the US dollar keeps its weakening cycle, which is most of the economists' base case, then the cost curve will have to shift upwards eventually. It would have to bring PGM prices to the rise. I'm not an expert. This is how I would interpret it, okay? So looking forward, it's important we balance everything we've talked about, and we've just shown as well that external factors can influence way more than these controlled variables that we try to identify. So we have to acknowledge that it's difficult to predict, but that there's cases, there's solid enough cases to support investments in PGMs, and people are doing this. There's a Brazilian investor, I wouldn't know his name, but he went to this conference of another commodity at the time, which was at an all-time low in terms of interest. And he describes it in one of his chronicles that when he went to, there was 5-10 people in the room discussing the potential for it. And fast forward today, thousands would gather for these meetings because the potential has been realized, even if most didn't believe in it. And now the same investor, he went on this podcast and he said that he went to the same sort of events in China about PGMs and the evolution of their prices. And once again, the rooms were quite empty. And he says the same scenario will happen with PGMs. And so he's on my side of the coin, and I think he's very right. And I do encourage you guys to listen more from what he has to say. I'll attach the link in the description below. Also, again, I think this is my biggest supportive claim. It takes 8 to 10 years for a new anti-PGM project, whatever it is, Tesla's, to really become online, right, to the world. And as I already said, there is no meaningful pipeline, I believe, in place to distress PGMs for much longer. All these factors depressing the price, geopolitics, sanctions, it's all a game, honestly. But yeah, I think you know where I stand in this. I've tried to give as many different opinions as I possibly could, but thank you again for listening. It might have been a bit boring, this topic, but I think it's interesting. This was Nuno Gomes for the Academic Observer on economics, business, and finance, and thank you very much. Bye-bye.